Hello, hello, hello. So, you're a homeowner. I'm Christa Coore-Powell, and you are maybe considering putting your house on the market. Well, I'm your trusted real estate advisor here in the Southeast Atlanta area. I'm your Atlanta property pro with eXp Realty. And today we're diving into a topic that is oftentimes on a seller's mind because they're not always sure how it impacts them, and that's interest rates, right? It's something we're always thinking about in the housing market, and you want to know how they're going to impact your ability to sell your home. So let's break it down. Okay, so when we're thinking about interest rates, we want to understand that interest rates are going to represent the cost of borrowing money. They think of them like brakes, like when you're like brake driving, right? You have brakes and a gas pedal. And so what's happening with interest rates is that when the Federal Reserve adjusts these rates, like pressing on the gas or pumping the brakes, it's managing the speed at which money moves in the economy. So it influences mortgage rates. That affects obviously both buyers and sellers in the housing market. And so we want to keep in mind that as of January 2025, so this is not so much a report on what interest rates are doing today, it's just a general understanding of how interest rates are going to impact your ability to sell your property. So keeping that in mind, now I got to read some facts for you. As of January 2025, we've seen some fluctuations in interest rates. So after a period of increases, the Federal Reserve implemented a significant 50 basis point cut, which would bring the benchmark rate to 4.75 to 5%. That's not how much you can get the loan for. That's called the benchmark. Borrowing money costs money. And so that extra percentage that maybe make it high, when you see an interest rate, for example, right now, interest rates are 7.25% as of mid-January 2025. That is because it still costs money to borrow money. So that's the base rate, and then there's extra percentages added on top of that depending on the borrower and the lending institution. It's complicated, but that's our 101 version. That's like interest rate for dummies. So all of this was done to stimulate the housing market and make mortgages more affordable. So that's why they brought down the base rate, right? So that's the basis point cuts. That's the point of that. Now, how does that impact you, the home seller? So what that means for you as a seller is, if interest rates go down, that will increase buyer demand because more people can afford mortgages, and so that'll expand the pool of humans that could potentially purchase your property, right? In addition to that, it also means that people have a little more cash, so you may be able to get higher offers because that will more buyers equals a more competitive market. A more competitive market means the potential for getting above asking price. And then faster sales. So homes are going to spend less time on the market due to the heightened demand. So there's like this constant balance between supply and demand. We probably all have heard that phrase before. And interest rates are one of the brakes that are used to manage that balance between supply and demand when we're talking about the housing market, and probably most markets to be fair, but today we're talking about housing. Now, what can a cut to an interest rate do for you specifically? And I think people are like, oh, interest rates are low, my house is gonna sell. There are also local market conditions. So in some areas, we've seen home listings increase even though mortgage rates haven't gone down that much because maybe homes in that area don't sell as often. It's by like the best school in the state. Like there are a variety of things that can impact the sellability of your house and how much interest rates impact that. So anytime we see a shift that is aiming to balance the market, it'll give buyers more options, and it may also slightly reduce the competitive edge that a seller may have. So again, a constant balancing act. And that's why it's so important to not pay attention to what happened when your neighbor's house sold 18 months ago or a year ago, to be fair with you, 6 months ago, because market conditions can fluctuate over time. Now, when we're thinking about strategy that you as a seller can think about and implement, you want to think about stuff like pricing your home competitively. So you want to look at comparables, you want to have a comparative market analysis run for you by a realtor, and then you want to sit down and look at, different price ranges in terms of what your options are for selling your home. You want to think about things like curb appeal. because you've done it and you know people who've done it. You go drive a neighborhood if you're thinking about moving there and you're like, those people clearly haven't, redone their hedges or whatever it is. So curb appeal matters because you want to create that first impression that's really inviting and have people think, yeah, that'd be nice. So investing in a little bit of landscaping never hurt nobody. All right, you also want to be flexible. Be open to negotiating. Remember that it's your home, yes, but it's also a business transaction. And so you have to be open to negotiating. If you're gonna do for sale by owner, then you have to be the negotiator. If you wanna work with a realtor, then that's my job to negotiate on your behalf. And consider different concessions. And the concessions don't have to be anything crazy. It can be something as simple as a warranty on a home or part of closing costs. There are quite a few things that are available. So maybe you wanna, I could think about a bunch of things. But again, a conversation with a realtor can help you with this, figure out what are some concessions you may be willing to offer. And so all of this is important to understand because interest rates are a very, very important factor. They're part of what we like to call the market conditions, but they're not the only conditions. So you want to keep that in mind and also think about how interest rates are sitting when it comes to pricing your home, because that will impact how you can price your home and maybe how much you can expect to make from that sale, simply because if interest rates are super high, that will affect how much borrowing power potential buyers for your property have. I'm here to help answer any questions you might have, and so don't forget to like and subscribe and hit that alert bell for more real estate insights. Thank you so much for watching. See you guys soon.